Hello and welcome to 10-Minute Mastery. This session will cover closing entries, introduction, and examples using the journal entry method. By the end of this 10-Minute Mastery, you will be able to journalize closing entries. What are closing entries? Closing entries transfer the balances of the revenue, expense, and drawing accounts to the owner's capital account. In this method, there are two closing entries. The order to prepare the two closing entries are: Step 1, revenue and expense account balances are transferred to the owner's capital account. And then in Step 2, which is your second journal entry, the balance of the owner's drawing account is transferred to the owner's capital account. And you can see here on your screen, the closing entries are the next to last step. So let's jump in and practice journalizing closing entries using the journal entry method. Keep in mind, every transaction impacts at least two different accounts, and debits are always recorded first. Closing entry number 1. After the accounts have been adjusted on December 31, end of the fiscal year, the following balances were taken from the Ledger of Arctic Company. So in this first closing entry, just to review, revenue and expense accounts balances are transferred to the owner's capital account. So what exactly do we need to do here? We need to debit each revenue account for its balance, credit each expense, account for its balance, and credit net income or debit net loss, the owner's capital account. And as you can see here on your screen, when we journalize the closing entry number 1, this is what it looks like. We enter the date. We are on December 31, which is the end of the fiscal year. The first thing we're going to do is debit fees earned in the amount of $844,000. And then we are going to credit all of those expense accounts. And then we are also going to credit the net income because TPeak Capital had a net income of $450,420,000. How do I get the capital? Well, capital equals revenue minus expenses. Here, the revenue was fees earned, and then you have your expenses, wages expense, rent expense, supplies expense, and miscellaneous expense. Let's take a look at closing entry number 2. Here in closing entry number 2, we are going to need to enter the date of December 31, and then our debit is going to be to TPeak Capital in the amount of $20,000. The credit is to TPeak Drawing in the amount of $20,000. And the $20,000 you can see here in the chart, that's the amount of the drawing account, which needs to be debited to the capital. So again, in journal entry number 2, the balance of the owner's drawing account is transferred to the owner's capital account. As you can see there in the journal entry, we debited the owner's capital account for the exact same balance of the drawing account. When we put this together, joining the 2 entries, this is what it looks like in your journal. This is a demonstration of the journal entry method for closing the accounts. Thank you for viewing. Feel free to leave a comment below, and don't forget to subscribe.